Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down slightly, about 0.4% there on the S&P. Yesterday, last couple videos, we've really looked at the market in an overall picture, explained to you guys in detail what was going on. So today we're gonna focus on the short term of things, what had happened, because obviously as far as the overall picture is concerned, after today's move, nothing has really changed. So for more detailed analysis, you can check out last night's video and then the weekend video on the channel there. So let's take a look at what happened today. So obviously today, this was the first hour of trading today. We slightly gapped up and then it faded, came back down to this support. It's 311, and that level has been support pretty much, I don't know, last couple days here. It seems like every time we go back down to that level, there's buyers stepping in, buying this up, at least in the short term. And then that's a second hour, right? We kind of hung around there, and then that's a third hour. We saw continuation to the upside, and that's a fourth hour and the fifth hour, and then came back down on the last hour. So I've adjusted this falling resistance a little bit. It would look something like that. This is what I mean. You never want to be too precise with these thin lines. So I've adjusted a little bit like that. So you always kind of want to give them some kind of wiggle room. You know, if you're too quick to be like, oh my God, yeah, man, that's a breakout, bro. I mean, it could have done that. It just, you know, just because you get these levels so tight, and you look at it so, you know, so closely, you know, and then you went long right here, place your stop right there, you got stopped out. Again, that's, I know, I think some people trade that way. That's just not my style, because you get stopped out too many times, and a lot of times, like what market likes to do, if you put your stop too tightly, if you like choking your positions to death, you gotta let it like wiggle. A lot of times it'll take your stop and just go without you, you know. So just understanding the overall picture is better, and give it enough room for it to kind of wiggle around before it makes a directional decision, rather than being so, you know, precise with this level and look like it was gonna break out, and it's just never a good idea to do that. So that's why I've adjusted a little bit, and it's still basically this line does not represent, it's not representing, like, just because, you know, stock or the price went like slightly up for that hour, that doesn't mean it's a breakout. This line does not represent you know, that if we go higher it's a breakout. That's not what he's saying. What he's saying is we're still in this kind of a, you know, short-term selling pressure that coming off from this level, especially we're still dealing with that, you know, bearish island top reversal. Anyway, so going back to it, so last hour we pulled back, retested this level right here, and we kind of hang around in that vicinity. Short term of things, the sentiment is still same as yesterday. Again, in detail, I've explained it on the last night's video, so you can go ahead and watch that for detailed explanation. But for now, we still want to give benefit of the doubt to the buyers in the mid to short term. But at the same time, we talked about it yesterday, I'm kind of being more neutral in the short term, despite the fact that the price is now above my short term moving average, because we still dealing with this downtrend resistance, and we are still dealing with that that island top reversal gap down that bulls need to fill, because the longer this gap stays open, the more hectic it's going to be for the buyers. So sooner or later, bulls need to go up and fill it. Bears need to protect it, and that's what's going on right now. You see that my short-term moving average right there, we just saw a cross. That's a bearish cross here, that's a bullish cross there. And because we're in an overall uptrend, when you see them here, let's kind of track the performance every time when we see a bullish, you know, cross going all the way back to April. So you can see the first time when we saw that blue dotted moving average and my short-term wiggly line there, when they crossed, that was April 7th, and we saw that move, right? And then we never crossed it back down until May 13th, right? So these guys never crossed back down. Last time we saw cross back down was back in May 12th, and then we crossed over here. So that's there. And then we initially saw pullback, and then we saw that move, pullback, we saw that move, pullback, we saw that move. And that's when we saw that midterm moving average acting as support. And then back in May, May 14th and 15th, you can see right there, right here, that short-term moving average crossing up to the upside with my midterm moving average. We gapped up, and the performance is that. So now we're seeing that cross again today while the price been moving sideways, right? So again, you can say that this time is different. It's not going to happen this time. That's not how you do your own analysis. When you do your own analysis, you always want to give benefit of the doubt that because it's been happening since the March lows, that you have to give benefit of the doubt that this could possibly happen. This could possibly happen until the price tells us that maybe it's not going to happen this time. How do we know that this bullish cross doesn't have a meaning to it? Well, when the price starts coming back down, right? And then it starts to go back up. Like if it does something like this, it comes down, goes back up, and then these moving averages start to curl back down like that. And then the price pull back down like that. If you see something like that, then at the time, okay, that bullish cross right here, that didn't mean anything at this time. Even though you worked out in early April and mid-May and we saw some tremendous upside move, this time it's not going to work out. Once I see the moving average curling back down and I see a lower low and lower high in the process, right? We don't have that. That's conjecturing, right? You're just saying that that's what we can't say that. Remember, every time when we do analysis, we have to do the analysis based on what you see right now, not what it's gonna be tomorrow or next week, but what do you see? So what do we see right now? What we see right now is prices above these moving averages. What we see right now is we just saw that bullish cross with my short-term moving average and with my mid-term moving average. And I just shown you the performance of that happening in early April and mid-May. So that's a positive signal, right? That's a positive signal. So let's go to the oscillator there. So going back, and what I want to figure out is this. We didn't quite get back to here. So let's go all the way back to like late March, early April. So you can see that's the overbought zone, right? And what we find here right now is that we never really got back to the overbought level. We're kind of stopping short and pulling back. After coming off of oversold vicinity, we bounce right back up. So how many times do we see this oscillator, right? This oscillator actually going back up after it hit oversold, and then it didn't go all the way back up to the overbought level, which is the top of its band. So that's oversold. We went all the way back. We didn't stop short. Okay, so that one doesn't, you know what I mean? Doesn't imply, relate to today's condition. But here in April 22nd, though, we did see a up move. We kind of stopped short and we started pulling back and then got back to the overbought level. Same thing April 4th. We did get up, but we didn't go all the way back up to the top of its band. We initially pulled back and then we got near to the overbought level, right? In May 15th, it actually went all the way back up to the overbought level. So that doesn't count, right? That doesn't relate with what's going on today. So we have two incidents here in April 22nd and May 4th, where we did see oscillator goes up and then it stops short. It doesn't go quite all the way back to the overbought level and start pulling back. So let's try to figure out what happened in that vicinity. So that's that's right here, right? That's right there. That's right here. And that's right. And then that's right here. And then that's right here. So that's what we're dealing with, a similar. And let's see if the price action is similar. Is the price action similar right now? Well, it looks like we were grinding above my short-term moving average right there back in May 23rd. Looks like right here also, May 6th, we were grinding above my short-term moving average. However, this thing did see price coming down to retest my blue midterm moving average back in May 6th. So let's actually blow up May 6th. That's right here. That's this right here, right? So you can see the price was hanging around above my short-term moving average. And then on this hour, we did see this thing coming down, retesting that my midterm moving average. And at the time, that gap got filled. And so I think that's why the gap was filled. And when the gap gets filled, it's going to act as support. That's the near my midterm moving average. And then next day gapped up. And that's we have a kind of a similar price action here today with the oscillators kind of curling back down. So what he's saying is there's a possibility that we might see lower move. Tomorrow's what, Thursday? So either tomorrow or Friday, we might see lower move to retest that moving average, or maybe even come all the way to 306, somewhere in this vicinity, potentially before going higher. And in that process, we might see this oscillator pulling back a little and then possibly getting back up. I think that's what's happening right now as the price is kind of hanging around and consolidating here, right? So I think that's kind of what I see today. Let's see what happens tomorrow. Again, you can follow me at 2K Kim, and I'll update you guys if I do see, midday or something like that on my Twitter and StockTwits account. If I do see price coming back down here at like 309 or so to retest my midterm moving average, keep in mind my midterm moving average does have pretty impressive resume in the short term because it acts as resistance here, and then act as resistance. If we do come back down, it may act as support. Or we're currently sitting at this, sitting at the that 311 support. There potentially we just continue higher from this point on. And bulls need to fill this gap right away. What bears don't want to deal with this support. Bears don't want to deal with that my short-term support. Bears don't want to deal with that my midterm moving average. Bears probably don't even want to deal with that 306 level, which was that gap fill area. You can see how fast this thing came down, how quickly it got back up. The best bet for the bears, if you're a bear and you want to see this thing coming all the way back down to like 299 or something like that, or 300, it has to be a gap down below 307 or 306 to jump over 311 gap, and then 309, that short-term moving average, and then the midterm moving average, because all those levels are going to act as support. I think that's the best bet. But if we start to slide going into tomorrow, these moving averages and the support will act as support, right? So I'll come back for you tomorrow night. We'll follow up and we'll go from there, right? You guys have a wonderful evening and good luck trading tomorrow.